Welcome to Stock Talk with Nico Kritikos. Today we're going to be doing some in-depth stock analysis for AMD stock. This is a stock that peaked out at about $162 a share last year, and now we're sitting at $87 a share. The market cap on this company is about $141 billion. So they are a pretty big company, and their main business is selling semiconductor chips for mainly GPUs and CPUs is how they make most of their money. Their chips are used in products like the Xbox and the PlayStation and different gaming systems, really. So if we get started with this, the first thing I want to look at is this article. So here we have some of their strengths are that the AMD Zen 4 leads the race for the 5-nanometer chip for personal computers. It is the smallest and most powerful microprocessor with features to lower high performance computing heat and power consumption. AMD partners with TSMC, which TSMC is Taiwan Semiconductors, and to bring a 5-nanometer chip for PCs to production in the second quarter of 2022. However, Intel, which is AMD's biggest competitor, is 2 years behind schedule for their 7-nanometer production due to internal manufacturing delays and will not invest in 5-nanometer in later years. Right. So Intel is kind of falling behind, even though they are their biggest competitor. It looks like they're falling behind, and AMD kind of has an advantage over them for right now, as of what it looks like right now. But if we keep going, we can see, therefore, AMD developed a competitive advantage in this market by launching an open software ecosystem platform, and it accelerates code development and blah, blah, blah. That's kind of what another advantage they have over competitors. AMD is the primary supplier for prominent cloud computing companies like AWS, Alibaba, Microsoft, Google, IBM, Meta, Oracle, Tencent, and Twitter. And in addition, AMD is a critical partner for supercomputing centers and enterprise IT for companies like Dell, Foxconn, Cisco, and Lenovo. Okay, so that's great. AMD continues to acquire new clients in the high-performance computer market. AMD won a contract to supply CPUs and GPUs for the Frontier supercomputer run by the U.S. Department of Energy, and blah, 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 blah. They make stuff for some of the fastest computers. Then we see they acquired this company for $50 billion to tap into a $135 billion market in adaptive computing, intelligent networking, and AI interfaces, right? So we have that. We have AMD is behind Qualcomm as a chip supplier in the wireless and mobile segment, which is not a big deal. That's not their main market. They mostly are in CPUs and GPUs. AMD's operating margin is the lowest among the semiconductor producers. We're going to look more into that in a little bit. That's interesting. AMD needs to secure additional production capacity as TSMC cannot keep up with the demand after Apple becomes the largest TSMC customer. However, AMD is also looking into outsourcing its GPU and APU production to Samsung after a significant investment in the 3-nanometer node production. So that's just some background information. Now we can get started with the actual checklist. So the checklist is going to start with, is the stock down or is it oversold? And I put yes, because the stock is down over 50% now. So that's good. Then we have revenue and net income. Is it increasing and improving? If we check out their revenue and net income for the last couple of years, we can see that this company has grown a lot from a couple of years ago. They were only doing, so back in 2015, $3.9 billion of revenue, and they were losing over $500 million. Then over the years, you could see 6 billion, 6.7, 9.7, and then 2021 they did $16.4 billion with 3.1 billion in net income. So fantastic numbers there. They grew at 68%, and earnings were up 27%. So that's both of those are gonna get a check. Then we look at their forward price to sales and price to earnings. The way I like to measure this is does it look like it's trading cheaper than it has in the past? And also another thing is their average revenue growth at least 3 times the price to sales? So let's take a look at this company is now trading at a price to sales of about 5.5. So that means we want their average price to sales to be, or their average revenue growth to be at least 15%. And so we just saw last year, they grew at 68%. And you can see throughout the years, they've been growing on average, probably at over 15%. Then we get to price to earnings. This is a little bit similar. Average EPS growth should be at least half of what the forward price to earnings is, which means forward price to earnings is 19. We want to see at least what? maybe 10% growth, right? So that's good. That's a good sign there. And another thing about the price to sales, in the past, it's been an 8 to 11, and now it's only a 5. So that's a good sign. Price to earnings in the past has been 26 to 43, and now we're trading at a price to earnings of 19, which is pretty cheap from that metric. And they grew EPS 57%. Well, wait, that says 57%. This says 27%. Either way, they're growing EPS on a pretty nice clip there, right? So if we keep going down, we will see, are they innovative? Do they have a moat? That was part of like what we read in that article about how they're making some chips that are going to be able to process faster. I think what they say, they're working on the 3 nanometer chip, and that's kind of giving them upper hand against competitors like Intel, which is good. Another competitor I would keep an eye on if you're thinking about investing in this company is Nvidia. They are very close behind. I don't even want to say close behind, because on some fronts, Nvidia actually is doing better than AMD. So that's another option to consider there. But definitely, they're definitely an innovative company. That they definitely have a moat working with companies like Microsoft and Amazon and all that. So they have some pretty strong partnerships there. Is it a growing industry? Yes. The chip industry is expected to grow 9% a year, which is pretty solid. Do they have a strong improving average return on invested capital? Yes. This number I gave, let's see, if we go down, we can see return on invested capital of 61%. That's very high. That's probably not what the average is. If we come back, actually, if we look at this, you can see here, where is it? That says 61%, but I think that was just for that was probably for the last quarter. And that was probably a bit of an outlier because investment. So and this is another thing that makes this company look really, really strong. Looks like they have a great management team, is because years ago, they were look at their return on invested capital. For years, it was negative 36, 46%. Then they started growing it. And so it looks like they got up to that 60% mark that was last year though. Now we're closer down to about 17%, which is still, that's not bad. That's still not bad. So then we can see, are they having, are their margins getting better, and how do they compare to other companies? Well, if we pull this up right here, this will actually show us what the average semiconductor player will do. So here we have their net margins. Let's start with that. Net margins for the semiconductor industry is 25%. Okay. And this company has profit margins of 18%. Well, again, that's for the last quarter. If we want to get a better idea, we can probably look right here and say, okay, how are their margins? Are they at least 25%? Because remember, these things are going to fluctuate. The return on invested capital and the margins they have, that's going to fluctuate by quarter and by year. So let's see, net margin. See, so it was 26%. It was around average, but now it's coming down a little bit. Because there's lots of supply chain issues out there right now. Lots of things are expensive. We have inflation, but at the same time, that semiconductors is one of the things kind of benefiting from it because there's so much demand for those chips, right? Then we can get to, and you could even look up for Nvidia what their margins are. I'm sure it's something similar, if not a little bit higher. Healthy cash flow. If we look at the cash flow statement here, let's see. So cash flow, we have operating cash flow has gone from 34 million 4 years ago to now 3.6 billion. Big jump there. And free cash flow has gone from negative 100 million 4 years ago to now 3.3 billion. And cash position is building. So I'm happy. I'm going to give that a check. Then we get to diverse revenue streams. I put no because they really just sell those chips. Their main business is the CPUs and GPUs. And although they don't have tons of, like, if something was to get in the way of their chip business, then yeah, that might be the end. That would be a huge catastrophe for this company. But they have so many strong partnerships that I don't really think that's something to worry about. I think right now they're ahead. They're at the forefront of a lot of innovation and technology. And we saw how they acquired that other company for $50 billion. So they're thinking ahead. They're planning for the future. And I think they're in a strong position. More assets and liabilities is going to get a check. We can see here that my computer is running extra slow today. So what are we at now? Over 7 billion. I think we're at, actually, it might be 13 billion. I think, let's see. It was 1.2 billion 4 years ago. Last year was 7 billion. And now today we're sitting at Oh, 55 billion. That's right. A huge jump because they acquired that company, right? So now we're sitting, that's a huge jump from 7 billion to 55 billion. That's not a, you don't see that very often. So that's going to get a check. Also going to get a check for this because $50 billion, over $50 billion of equity for a company worth 150 billion. That's over a third of the market cap, right? Then let's keep going. Strong share buyback or a dividend? No, their share change year over year was actually up 15%. So you're actually diluting shareholders, which is not good. Are insiders interested? No. If we take a look at this chart, you can see there's not much buying activity. There's probably more selling activity than there is buying, so not a good sign there. Maybe, I mean, we want to see insiders buying. So hopefully the next month or two, we see some insiders buying because the prices dropped so much. Then if we keep going, we can see, are they founder led? Do they have a good management or talented team? So the CEO of this company, she has been working at this company, I want to say, for over a decade. So let's see. So she's been the CEO, I believe, since 2014, right? Yeah, AMD 2014. And then let's see. But see, she was working at AMD even prior, and she actually worked at IBM and at Texas Instruments prior to. So if you can go read about her, and she has tons of great experience, and she also has done a great job growing this company. So I would say yes. I would say for what they're doing, they have a great management team and a talented team of researchers and engineers and everything. Because look how much the stock price has grown. Look how much they've grown their equity. Look how much they've grown the money they're making. Everything. So finally, does the amount of cash on the balance sheet cover their short-term debt? Yes, they have 6.5 billion in cash and about 5.6 billion in short-term debt. That's good enough. That'll work. So altogether, we have what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 out of 17, that's going to be considered a buy. So I would consider this stock a buy. Personally, I'm kind of interested in looking at NVIDIA or Taiwan Semiconductors. Let me know if you want me to make a video on, actually, I made a video on NVIDIA a couple weeks ago, but if you want me to do Taiwan, let me know. Actually, this is supposed to be 14 out of 17. But yeah, I would say that AMD is still a great investment. Most of the chip players you can't go wrong with. Even if you pick a Qualcomm or something like that, Texas Instruments, those are both going to probably be great investments. So yeah, all in all, I would say AMD is a strong company. I think they're in a good position. They're in a good industry. They have good innovation happening at the company. They have a good management team. They have a good balance sheet. The cash flow is growing. So everything looks good here. I'm going to consider this stock a buy. Thank you for watching. I will see you in the next video.